Hello, people. And we have some interesting news. Big banks like Citi and JP Morgan are making extremely bullish predictions for crypto. But is this true, or is this just a diabolical plot to set us up so they can liquidate us and then push the price up? Now, if you're not trading leverage, this probably doesn't matter because you can just hold through their attempted liquidation, which shouldn't be too much lower. But if you're doing 10, 20, 30x, you might get destroyed. But that's really your own fault, and it's not my fault you're getting destroyed because I told you specifically not to play high leverage. But let's actually look at their analysis and see if it's actually good. If you look at JP Morgan and Citi, which are two big financial banking firms, they see a crypto Bitcoin boom with prices as high as $200,000. So they're not like insane like Kathy Wood, like, oh, let's go to $1 million. No, that's not that. $200,000 is within the possible range. I don't think it's probable, but it's definitely possible. And this comes on the heels of this 300 billion boom that's been touted as rocket fuel for the crypto rally. I am basically reporting off of Cointelegraph, but many other outlets have reported the same exact things. And of course, Bitcoin ETFs have kickstarted October, which is kind of like, I guess, crypto people's kind of like an improvisation of October, with 3.2 billion in the second week, best week on record. Now, let's gauge that like the week before it, we had a really bad week, so it could just be a bounce back. September was somewhat bearish, but not super bearish. We actually ended September okay, but October I think is definitely going to be positive. That with the ETFs coming through in the middle of the month, I think will actually generate a bit of a boom. So you have a Bitcoin boom in Q4 as reported by Citi and JP Morgan. And of course, Wall Street's year-end forecast, you can see this on CNBC as well, have ranged from 133,000 to as high as 200,000. So 200,000 is the very highest amount. Now, for my part, I think it's going to be between 150 and 180. And of course, they say that Bitcoin is going to have inflows from gold. Now, I don't really know if I agree with that. I don't think Bitcoin's seen as quite the hedge as gold is. I don't think it's kind of seen as the same safe haven as gold is. So for the people, and gold's been going up a lot, and they're saying that some of that money is going to rotate over. Maybe like, I don't know how many Gen Y and Gen Z people are actually investing in gold right now, but I think gold is a better safe haven than any crypto in times of distress. And as long as people have economic uncertainty, I think a lot of them will stay in gold. Now, I think as the rates come down, maybe people will get a little bit more brave and put some of that money into Bitcoin, but I wouldn't be predicting a huge inflow of money from gold into Bitcoin. Bitcoin's gone up by 13% over the past 7 days, but it actually had a resistance around 124.5, which was the last all-time high. It went up to as high as like 123.8, but then bounced back down. And right now it's roughly around 121.6. So it's been a little bit more volatile than usual. I think this volatility, I think it's very, very good that we haven't bounced down back into like 115, 116. That shows it has some staying momentum in the 120s. And if we can stay, I think, at this price for more than a couple of days, I think we'll have enough buying power to bust through the all-time high, whereas we will be in price discovery. Obviously, Ethereum has recovered somewhat, but the altcoins have been very disappointing. I think the altcoins are coiling up and just waiting for Bitcoin to break that all-time high before they start rolling up, also waiting for the ETFs. Now, the ETFs are only on like 15 or 20 coins, but it'll have an impact far beyond those 15, 20 coins. And let me actually explain that, because most of these coins are actually tokens on a specific layer 1. And generally, tokens on layer 1 are generally like at the mercy of how that layer 1 does for liquidity. Now, there are some exceptions, like the tokens that have gotten on major exchanges or tier 1 exchanges, but that's not the majority of the tokens. Most of them are just traded on DEXs, and those completely depend on the liquidity of the L1, and many of these L1s don't have liquidity. But that can actually change a lot once these ETFs come in, when we have these cash inflows, and if we go in a bull run, all the retail investors will become interested and come back. Once they come back, that liquidity is going to boom and all these altcoins should actually go up. But that all depends on Bitcoin going up. Now, Citigroup, I think, is the most bearish out of all of them. They see Bitcoin to end around 133,000. I see more of the 145,000 area myself. I think 200,000 is a stretch too far, and we might not reach like 150, 180 until the middle of next year, which some people would say in the bear market. But remember, Jerome Powell is quitting or being fired, basically. Well, he's not being renewed, let's just say, next year. And because he's not being renewed, a Trump FOMC chair is actually going to come in. He's going to slash rates like crazy, and that might be when we get our big burst. Obviously, 133 is only a modest 8.75 upside from the current price levels, which means like if it's really 133, the growth will be much slower than expected. This time we might only hit like 128, 130, and then next time we might go to 133, 135. For me, my target right now is just in the $135,000 area. I think this projection is a little low, especially with the crypto ETFs coming through. I mean, I think like as soon as the government shutdown is over, we will definitely see some big rise to the upside if we don't see like a small flush out first before we see that rise to the upside. So like the banking giants base case projects steady growth supported by robust inflows from spot exchange traded funds. ETFs, I mean, even though they do have ups and downs, they are steadily gaining in terms of TVL, and that's very, very promising. And of course, that's just like going to accumulate more and more money that's not, and more coins that are not available on the overall market. And that's really going to help drive prices up. Of course, as of Saturday, all US-based Bitcoin ETFs were managing over $163.5 billion. And Citi that estimates that fresh ETF inflows will be about $7.5 billion by year end. So if you look at 163.5 and 7.5, that's not really all that much. That's maybe like a 5% increase. So them projecting like an 9% increase in price because of a 5% increase in ETF flow or ETF value, that is actually legitimate. But I think like, if Q4 is really bullish, we will far surpass those expectations. And I do think like when we hit past the all-time high and some of these ETFs come through, I think a lot of retail will actually be interested again. You can see like the retail interest in the spot Rex Osprey ETFs for Solana, Dogecoin, and XRP. There's a lot of interest in those. Once the big batch of ETFs comes through, I think there'll be even more interest in those. And that kind of interest is what's going to drive us. And I think it's going to drive us much, much higher than 133. JP Morgan is a little bit more in line for my forecast. They think that Bitcoin is going to go to 165 by the end of 2025. You note that like none of these like big predictions, big bank predictions are like absolutely insane, like 500,000, because like they actually have some kind of responsibility to remain mostly sane and not project like completely laughable numbers like Cathie Wood or Tom Lee or things like that. Now, 165,000 I definitely think is possible. A little bit over my own projection of at the end of 2025. And I think at $165,000, you're going to see a lot of alts really, really start to pop off. And JP Morgan saying Bitcoin is undervalued relative to gold. Now, they're looking at Bitcoin as a good hedge asset. I don't know if they plan to move a lot of their money into Bitcoin. That could be true, and that could change the game entirely if JP Morgan plans to do it. But if they don't plan to move a lot of their assets into Bitcoin, this is all just speculation. The Bitcoin gold volatility ratio has dropped to below 2, meaning Bitcoin now absorbs about 1.85 times more risk capital gain than gold. That actually might be because of gold's really high price. But remember, like I said, I believe gold's just a better hedge than Bitcoin in times of turmoil. And I think people are going to continue to rely on gold as their main hedge. Based on this ratio, Bitcoin's 2.3 trillion market cap would need to climb by roughly 42% implying a theoretical Bitcoin price of around 165. So this is completely based on the Bitcoin to gold ratio for risk. Now, I don't completely buy that. I actually think that gold is just more sound right now because people have seen that as a reserve asset for basically thousands of years, and they're not going to come off of that. So while I do see some flows from gold to Bitcoin, I don't think I see as much as JP Morgan does, because I don't think people are going to be like, oh, gold is too high in price, we better go into something else. I think people are going to be like, oh, gold is still really good. You know, the US is not that dependable. Fiat looks kind of dangerous. So if they really think that, they're going to put their money into gold. But there is going to be some flows, and that, coupled with the increased ETF flows, plus the boost that we'll get from these altcoin ETFs and retail coming in, could actually push Bitcoin to 165,000. So they are obviously looking at like kind of like a gold cycle as well. And some people are saying that could push it to 200,000. So like Standard Chartered, and Standard Chartered, I would say, needs to be taken with a grain of salt because they've always been super, super bullish on Bitcoin, more bullish than the other institutions. They're predicting $200,000 by December. And he cited the inflows as well, averaging 500 million a week. But there's negative weeks as well. But if you actually look at this specific chart, BTS US spot ETF net flows, you can see the positives obviously outweigh the negatives, but there are long periods of times where we have negatives, and I think we'll have one or more periods. So I think that will actually slow the rally down. So that's why I don't think we'll get 200K. We might get to 200K going into next year, next May, because of the rate cuts. But right now, like, we're only getting probably 2 more rate cuts, and I don't think that'll be enough to trigger things. I hope I am wrong. But at this point, I don't see prices being that high. VanEck sees Bitcoin climbing to 180. Now, I think 180 is kind of like the ultimate goal for Bitcoin in this specific bull run, but I think it'll be reached more of next year rather than this year. If we reach 180 this year, we could possibly reach 220, 230 in the middle of next year. I'd still think you should probably sell, like at the end of this year, because there probably will be a dump between the first and second peaks, and you'll be gaining substantial amounts of money selling at the first peak. And they're arguing with the 4-year cycle as well. And they say like, we're going to see kind of like a squeeze. But, the 4-year cycle hasn't been the exact same every 4 years. So I don't know if I would really depend on that. So basically, they're looking at historically, Bitcoin had reached its cycle peaks between 365 and 550 days after a halving. As of Saturday, it has been 533 days, so we really only have 17 more days. And I don't think we're going to get to 180,000 within 17 more days. So the whole VanEck prediction, I don't really give a lot of credibility to. So I am not within their 180 prediction. Once again, I expect around 140, 145, maybe even 150 by year end. I see the ETF growth doing that. I see a little bit of altcoin boost to Bitcoin as well as the other way around. I expect the overall crypto market cap to be about 10 trillion in this bull run when it's all said and done. Obviously, it'll crash during the bear market like it always does. But I think during the bull market, that's the numbers that we're going to do. I do think, like, aside from Citi, all these are a little bit more optimistic than me. But then again, they definitely know something that I don't know, and they might be willing to pour more money in. And if they're willing to pour money in, then obviously my own predictions are going to be too low. So those are the big institutional projections for Bitcoin. And the theories like gold is going to spur on Bitcoin growth, or some of the money is going to flow in from gold. Maybe that'll happen, but I don't think the rates are going to come down enough for that to actually happen this year. But still, having them so bullish, because, their predictions do actually relate a little bit to their credibility, and those guys really like their credibility, obviously. So having them being so bullish is definitely a good thing for us. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you in the next episode.